Hey traders and investors, it's Serge Berger here. Over the past few days, I got a lot of questions on the banks all of a sudden from subscribers of the Clubhouse membership and also just from the general audience out there. And it's a very important point to make, and I'm glad I got those questions. So let me quickly explain to you guys what's going on in banking stocks and how important that is to the broader market. As you know, my base case for 2016 is that we're going to have a very volatile market where we really need to have an active investing approach to where we buy the dips, but more importantly, sell the rips or sell the rallies, because at least I would think through the first half of the year, we're going to continue to make lower lows in the broader equity indices. And banks, as a general parameter, are really, really important for that. So first of all, banking stocks, of course, making up a large part in terms of the finance industry, making a large part of the economy. It's important to understand that as long as they don't rally, it's going to be very hard for the broader market to rally. Second, and actually it should be a first point, is the flattening yield curve. Okay, the flattening yield curve, which if that's too sort of complex for you, don't worry about it. Essentially what we're having the lack of inflation reflect and the lack of economic growth, for that matter, being reflected in the yield curve. So banks make less money if the yield curve flattens. Okay, let's just leave it at that. And the yield curve is very flat right now. Okay, now in terms of price action, which is really what we want to focus on as active investors, this is the BKX KW Bank Index, and the KBW Bank Index. If you're a subscriber of the Clubhouse, or if you have taken a course or something that I teach, you're probably very aware of this index. But essentially what you can see is that we're starting near a pretty important area here from a price perspective, a multi-year area of support. This comes after having broken below previous support. But if you note these big picture swings, and this is really sort of these big sort of macro things, they tend to retrace a certain amount that is quite important from a Fibonacci perspective. So again, very simple. What we're going to try to do is draw a Fibonacci retracement from those lows in 2009 to those recent highs up here. And you can we retrace exactly 61.8% of this entire move up before we started going higher. And I would think at this point, given the crucial point we've gotten to from a cyclical bull market perspective, and also from the economy, I would think we should be able to retrace probably close to that 61.8% retracement as well this time around. And that would get the BKX KBW Bank Index down closer to the low 50s, or about another 15% lower from current levels. And that's really the big point I want to make, is that I do think banks have plenty lower to go, certainly not in a straight line. In fact, I would be very surprised if we don't see a meaningful oversold bounce here at some point pretty soon. But ultimately after that, I would tend to think that we'll continue to see lower prices. You can look at the XLF, and this may be your trading vehicle for this if you're interested in partaking in this. The XLF, after having broken plenty of trend lines, if you take the 2011 support line, that has broken quite some time ago. We've retested the previous retested that high over here at which became resistance. And again here too, if we were to look at this entire retracement from 2011 lows from a Fibonacci perspective, 61.8% retracement is at closer to the mid 16s, and this ETF currently trades closer to the $21 mark. So you can do the math. That's a fairly substantial drop that may still be ahead. And again, it's all because of the big macro picture, which is why I always say that the 1, 2, 3 step approach that's repeatable and simple is that you have to understand what's going on in the broader market. You then have to make sure you trade or you play in that trend. And thirdly, you have to pinpoint those trades using the near-term mechanisms that I always talk about in the courses and in the Clubhouse membership. As a housekeeping note, we are going to have the 2016 market outlook take place this Thursday. I believe it's the 28th of January, so be on the lookout for that webinar invite. Also, please like the video, subscribe to my channel. That's how I move up in the YouTube ranks. And as always, I'll see you in the next video.